to the stock market morning prep video for Thursday, July 17th. Dow Jones up 77, Nasdaq up 9.5, S&P up 8, and the Russell down again, down $2.26, showing us major divergence in the indices that we follow. Russell is one of the leaders. You have to pay attention to that. Yes, it actually lagged back in March and April and played catch-up. I do think this time it's a little different. The markets just do not feel right. I know we don't base our decision making on feel, but you need a little bit of feel. I think the markets are poised for a bigger move in the next couple of weeks, maybe days, but I do think that move is going to be to the downside. Can it happen and the market just continue to rip higher? Absolutely. But just the way the indices are reacting, and you have the pundits of CNBC, Fox Business, all screaming, cheerleading that hey, we're making new highs again, but they're not looking under the hood of the markets. And I've been showing you the index for many years now, but most importantly, I've been showing you two indicators: the advanced decline with volume and advanced decline, and you can see that we made new highs here, and we are absolutely dipping lower. Stocks that are above the 200-day moving average, above the 50-day, they're not actually confirming what the markets are doing. And we haven't really had that. I mean, we had this here a little bit, and if you remember when we had this little bit of a dip, and then we were thinking maybe that the market may have been rolling. It kind of stopped and just kind of bounced around here a little bit. So really no signal, but we didn't have this. This is actually trying to break out. As the advanced decline line, the breadth of the market is deteriorating, the markets are continuing to move high. That is not going to happen. It eventually will stop this market, stop the rally dead in its tracks. We have tensions escalating in Israel with Gaza, in the Gaza Strip, excuse me. We have the Ukraine conflict. We have Iraq, and oil was actually down for several days. I've been mentioning oil. I like oil on the long side. I'd be buying any weakness on oil around 100, 101, and leg in slowly. And if you had to buy oil or you had to buy options, go into September, November, even after January if you got that much patience, because oil is going to be another area where I like to see an explosion to the upside, which it will happen. Above 110, you're going to see a beeline shot to 115, and then who knows where it goes. But I do like oil. I like the fact that they haven't picked up on. Well, I shouldn't say that. The war, the conflict, the war premium as they call it, it kind of died down, and then there was more oil coming online because of the shales. They're picking up more oil, and then they have the pipeline. So that kind of put a damper on the excitement of crude, but you cannot deny the fact that when you have tensions, geopolitical tensions, crude oil will rise. And if this conflict in Iraq gets close enough to these oil fields, they're going to capture the oil fields. They're going to at least one, all they need is capturing one. You're going to see oil up $5, $6 in one day. So just a word of caution. As far as an indicator, that's not good too, because it takes any stimulus out of the economy, right? Because if oil is rallying, gas prices start to escalate, and people tend to say, "Wow, I just filled up my tank. It cost me $120. You know what? Let's just hang around locally," and they don't really drive. Now I'm talking about the normal everyday person that goes to work 9 to 5, and that has a regular job. Not talking about the people that make a lot of money, because it really doesn't affect them, but it does affect the economy. So that's something they also need to think about. But getting back to the indicators, I just want to let you know I do like crude oil. I like the builders, but I don't think the builders are. Not sure if they're going to be ready for it. I've been showing you this lumber chart with the builders, Toll Brothers, Lennar, for a trade. Yeah, I love them long for a trade if you can get a spot. Yesterday we had some housing data yet again, and it was positive. But as you can see, it actually fell. This is their time to shine, and they're not seasonal strength in the builders, but they're not really doing so. Why? Because we have lumber prices that are actually deteriorating here. So for a trade, yeah, and I think you get a bounce. If you do get a bounce, it's going to be limited. So For a day trade, absolutely. If you can pick a spot and run up, a lot of the builders after the number came out kind of ran up and rallied. They at one little dip, and then that was pretty much the end of it. But keep an eye on the ITB with the lumber. I do think that that's going to be a very good indicator. When it's ready, lumber prices will start to really skyrocket, and then you'll have the builders follow suit as well. Okay, but I do like the builders. Banks I really like, but banks on the pullback. Remember, if the market decides to roll over, banks will roll over with it regardless. So that's a little bit iffy. I think the markets are totally iffy at the moment in the sense that there's not a lot of conviction for me to put a lot of money to work, unless you, again, if you're doing spreads. That's a little different. But if you're just trading stocks or you're looking to go directional with options, I would not do so unless, again, it's a sector that has bottom, like sort of like crude oil, and I do like a lot of the potash stocks, the POT, the fertilizer stocks, if you will, Monsanto, Mosaic. The charts don't look as great, but they're bottoming, and the reason why I like them because they have seasonal low cycles in the grain markets, corn, wheat. When they start to move higher, you'll see these fertilizer stocks start to pick up steam. So just another thought, I don't think they're ready yet, but I do think that you should put them on your radar. Potash, Monsanto, and Mosaic. And along, if you want to play corn, corn has gotten decimated. But if you look at a corn ETF, CORN, it's a very slow trader. But if you can patient enough to pick up a little bit of shares or option contracts, put them away, I think you'll get rewarded before the end of the summer. All right, so let's go show you the NYAD, excuse me. And this is another one, the advanced decline issue is just terrible. The other one I showed you with volume, but look at this. This is totally just breaking down here. So I do suspect that we should get some sort of a sell-off. I don't know how deep it's going to be, but I want to show you something on the hourly chart when we get to the indexes. All right, so let's take a look quickly. We'll run through them. Here is the Japanese yen. You can see this is this morning because we're down a little bit this morning. Actually, we're down 12 handles now. Prior to me starting the video, we were down only about 8, and we've actually sold off another 5. So you can see the market has no memory. One day up, next day down, 2 days up, and then 1 day down. Something is going to something's going to happen, and I do think, again, at this time, it just feels a little different. I mean, again, guys, don't want to be a broken record, but just be careful out there if you're actually holding a bunch of positions. Okay, Japanese yen spot. When this starts to rally, markets actually start to sell off. It's inversely correlated, as we all know. Now, we're sitting on this cluster of support, which was resistance, and we do have an ascending triangle. So if we do break, I like to see this. It's probably going to test the 200, probably fail a little bit. But if it breaks above the 200 and stays there steady, you could really see some movement to the upside. And I will put some numbers out there once that does happen. Now, here, I think, is something that needs to be watched extremely closely, is bonds. I put the bull flag, bull flag we broke out of that yesterday. Okay, so this has a bunch of strength. I do think that in the short term, again, bonds are in a short squeeze. And why? If that happens, then I think that the markets will sell off, and that'll just add fuel to the fire for more correction to come in equities. So we hit the 1272. My target, as we all know, is the 140.26. That's the 1618, which also measures this inverted head and shoulders that I showed you back in the early part of the spring. Left shoulder, head, right shoulder. Here's a slanted neckline from here to here. Measures 140.26. So great symmetry on the targets. And this is why I'm saying if you really like the bonds, and I like them, and I would be buying, the TLT, look to buy them on any pullback as well. Another great idea. Now, and remember, you could see this. We had some couple of down days, but if you really think about this, pretty much all of June, and the market has gone to new highs. The bonds haven't gone anywhere. So that is definitely a cue that you have to be very, very careful here with this market because something is happening why bonds are not selling off. Okay, and bonds are the smartest market out there. So here's the ES now. Excuse me. Here's an hourly chart, and just to kind of bring the chart in, here's the concern that I have too as well. We have new highs 1970-25. We tried to make new highs twice. We failed, making that lower high from the top. Now it was very close. You could see, very close. And then we started failing, and now we're breaking breaking back down again. Here are three pivotal lows that you need to look at. We have 1944, call it 1945, 1940, and 1930. A break below this 1930, 1929, 25. That is going to be, to me, I think, the spot that's, to me, will give the conviction that the selling has started. Okay, remember, we could be down 20, 30 handles and be down to that area. Now, remember, I don't think that the market just goes straight down. I don't think so. It might take maybe a week before this does happen, and it might not even happen. We could, draw a little trend line. We come back up and we make new highs again. That's the way. That's why this market is so difficult, because every time the market gets a little momentum to the downside, buyers of dips come in and step in and buy. But I think that, I just think that the markets are so exhausted up here. You have to have caution. Here's the daily chart. As you can see, doing nothing wrong. We're above the 20. Okay, bull flags all the way up. And we tried to make new highs. We did not. We failed. And now we're back down testing the 20. I'd like to see the way this thing's going to work is that all of the indices, the 5 indices that we follow, have to start breaking down together as a whole, and then you would get a little bit more conviction to the downside. Okay, here is the transports, and again, with oil prices rising high, something looking to short would be the transportation sector. To me, if oil continues to stay up here, airlines have been very, very strong, but they are heavily affected by rising fuel cost. So take a look at some of the airlines. And remember, that would be counter-trend because the airlines have been extremely strong. So you have to understand that, all right? And if you're not counter-trend trader or you've never done it, stay away. IWM. Now, here is what I'm looking at. The two big factors, aside from the indicators that I just showed you, are the IWM and the bonds, and of course the Japanese yen. Excuse me, make it three. This here, I think, is different this time. Even though it lagged and then caught up, now you're breaking down here, and you're breaking down miserable. I mean, this is really has to hold. If this doesn't hold, you'll get the 200-day and then even break below this. So this is really serious. And if you're a day trader or you're standing in front of screens all day, I'd be staring at this. If it takes out this low, I think it goes lower, and I think the market goes lower. Okay, two more. Dow. We made new highs in the Dow. Everybody putting their Dow Jones cap on, and all of the cheerleaders in CNBC. Stay away. Don't look at them. They have no idea what's going on here in the general market theme. And then lastly is the Qs. Okay, Apple did miserable yesterday. I don't know why, but Apple breaking down. Some of the bigger high beta names starting to break down too. So I want to see all of the indices starting to break down, along with following the IWM. It is one of our leaders. We have our indicators already telling us we're pointing lower. Let's see what happens with bonds. Let's see what happens with Japanese yen, and then take that analysis, put it together, and I would be preparing a good short list. And then we'll see what happens here. Let's get some signals that we are indeed headed lower, and then we could start looking for some shorting opportunities. Okay, but until then, believe it or not, the trend remains up, and the trend is your friend. Keep it light on the long side, and then we'll see what happens here. Right? All right, everybody, have a great day. Be safe out there. We'll speak to you tomorrow.